Welcome back, guys. Well, the madness continues down here in Southwest Florida. Florida as a whole. Got a lot to cover today, but I want to focus on insurance mainly because, oh my God, the stuff that I'm seeing is just mind-blowing. Specifically, flood insurance is becoming catastrophically disruptive to this market. You guys know why. You know, some of these quotes are absolutely insane, and these solutions sometimes I think are even worse. I ran into something, I've heard of this before, but this is the first time I've seen it. A builder, rather than lower their price, by the way, which the house is overpriced, they're gonna start running incentives where they'll pay your insurance for the first year, all your insurance. Now, this particular house that I had buyers interested in, well, the flood insurance quote was gonna be anywhere between, well, $1,800 and $5,500. The high end was $5,500, and that actually came from the builder's insurance rep. They came in with the highest quote. We have a half-completed elevation certificate, but that's insanity, guys. That's over $400 a month, and the homeowners was about $1,200 to $1,800. So really, if you look at worst case scenario here, you're gonna be getting clipped with almost over $7,000 just for insurance. That's on brand new construction houses, guys. And people wonder why everybody wants an X-flood zone. And let me be clear, X-flood zone is still a flood zone. People will write that it's not, but it absolutely is. All of Florida is a flood zone, guys. Remember that. You should carry flood insurance any property you get. So now you're staring down the barrel of an overpriced new construction house with a $7,000 a year nut just for insurance. And the builder turns around and says, we'll pay that for you. Okay, well, what about next year? What are you talking about? Which leads me to the other thing that I'm seeing a lot that you guys have got to watch out for. Do not believe agents, don't believe sales reps, don't believe builders. Call insurance companies, give them, local insurance companies, give them the property address and say, hey, what's the worst case scenario for insurance on this home? Can you give me a quote? Guys, they will normally do it within 24 hours. Do not take anybody's word on any of this stuff, even mine. Do your own due diligence. That's the whole theme of my channel. Make sure you're checking into this stuff, because let me tell you the second part of this that they're doing. They're telling everybody, and they've been doing this for a year, that don't worry about it. You can appeal to FEMA if it's in a flood zone and you can get it rezoned. That is absolutely true. You can appeal. There is no guarantee that it will be rezoned. That's the part they don't tell you, unless you ask, and they're like, well, you know, nothing's guaranteed. But that's the first solution. Don't worry. We'll pay your insurance for a year, and then by next year, you won't even need the flood insurance. And honestly, guys, what the hell do they care what happens? Because they sold you the house and they're off into the sunset, and you're left to deal with the baggage and the repercussions because you were told or assured or suggested that this flood insurance is just gonna go away. FEMA's gonna rezone it. Crap, guys, crap. Do your own due diligence, don't ever believe that, and call insurance companies before you make offers. Maybe I get a little too hot about that, guys, I don't know. Blew up there a little bit, but it just makes me so mad because these people don't know. And if they tell you they do, they're lying. Another thing I saw recently was we were working with a builder's rep. A person was interested in a specific lot. We've been looking at this place for quite some time, and prices are starting to look like they've adjusted. But in the meantime, the community also was denied their rezoning request for some of their homes for the FEMA flood maps, which is really murky if you sold somebody in this community a year ago and told them, hey, it's in a flood zone now, but we're rezoning. It's gonna get approved. Oh, well, now it didn't. Uh-oh. Uh-oh. Maybe they thought that they were only gonna be carrying this flood insurance policy temporarily. Now what? If you can still carry it, great. But what if it's really expensive? And what if it was supposed to be a temporary thing? Now, of course, the community is appealing it. I don't know if it's gonna go through, guys. I don't know, none of us know. And when people say they do, they're lying. None of us know what tomorrow brings. So that's a really murky situation. I almost feel like that these offers to pay your entire insurance policy for a year, or these guarantees that things are gonna get rezoned and your cost will go down, are riskier than adjustable rate mortgages. At least with an adjustable rate mortgage, you have the anticipation that worst case scenario, things are going to go up. With these, worst case scenario is things stay the same. And if your worst case scenario is things don't improve, you should not be purchasing a property. If financially, the worst possible outcome is your payment stays the same and does not go down, you should not be purchasing properties. That's my opinion, but I think any financial guy will probably tell you that as well. Not financial advice, just. So I think these are way more dangerous, these programs, than any adjustable rate mortgage. Because if you don't get your house rezoned and you take their insurance payment for a year with their preferred insurer who's gonna give them a lower rate, not only are you gonna have to deal with the insurance payments the following year because you couldn't get the house rezoned, they may be 3 to 4 times higher than what that builder was paying because they had a preferred relationship with that insurance company. So watch out for this stuff, guys. It gets me very hot. I don't like what I'm seeing. Another thing I saw recently was, well, we'll just put a contract together and we'll put a contingency in there that if the flood zone doesn't get rezoned, oh, don't worry, you can back out. Really? That's interesting. I never heard of that. They told us that the rezoning should be completed by the end of the month. So right away, the flags go up for me and the buyer. We're like, let's get out of here. We'll talk about this later. We've been looking for a while. No. Weird. And, you know, they had questioned me and said, is that something you think they would honor? I said, I don't know. Let me see. So I posed the question, hey, listen, you know, if we were to make an offer on that flood zone being rezoned, if we make the contingency on that, and what that means, guys, is basically if the flood zone isn't rezoned, the buyer can back out and get their deposit back because you're going to have to put a deposit down. Whether you're paying cash or not, you're gonna have to put a hefty deposit down. Then all of a sudden it changed. Lo and behold, wouldn't you know, it turns out they're actually not gonna find out this month. It's not gonna be till October now that they'll know. If you had gone under contract, given them your deposit with that contingency, that in 30 days you're gonna find out if this is going to be taken out of a high velocity flood zone, and they turn around and go, oh, well, we're not gonna know till October. They got your money till October, guys. You're not getting that deposit back. They're hanging on to your deposit now for 4 months, maybe longer if they push it back again. All the risk is on you. You're trapped in, and they can go, hey, listen, the contingency says we got to find out. We haven't found out. You know, again, not legal advice. Always consult a legal professional, guys. But the way I read that, the way I interpret that is exactly some of the risks that you could be facing. It may have been that the sales rep just didn't know. It may have been that's really what happened. It changed the day they looked. I don't know. I'm not attributing malice to it. But if you don't know to ask these questions, your agents don't know to ask these questions, these are the kind of situations that you can get caught in with this stuff. So I always stress, do your own due diligence, guys. Do your own due diligence. And it's not just when you're buying. This owners down here are getting absolutely crushed by this flood insurance still too. It's nuts. We had a guy recently, owns a 2-bedroom, 1-bath with a carport. It's 900 square feet, it's built in the 1960s. Great starter home. You know, I don't know when he bought it, but I do know it got rezoned into an AE flood zone, a high velocity flood zone. And now his mortgage payment is up $400 a month. Is some of that fueling our inventory hitting the market? Absolutely. But it's creating the same barrier that it has for new construction. Basically, at the end of the day, guys, oh, this place was for sale. I wonder if they took it down. Actually, I wonder if it's sold. Let's see if I can pull that up too. Yeah, let's head down here, see if I can pull that up. All right, guys, so it looks like this house did expire. Really nice house. I walk by it in a lot of these videos, and it was previously sold in 2021 here for $430,000. That's actually 10% off what they were asking at the time, $479,000. It was listed for sale 2 years later for $639,000. A little rich, that's a 48% increase. That was back in May of 23. We've got a price drop to $599,000. Oh, bold! Then a price increase to $659,000. Oh my God, not only 6 months later, and they had to end up bringing it back down to $599,000 where it sat and unfortunately expired. And this is the struggle I'm having with builders, with sellers, things like that, but they're coming to reality. When the cost to carry increases $400 a month, they sell people on monthly payments, guys, most of the time. Even if you're cash, that's gonna be, you know, another $400 to carry is a lot of money per month for flood insurance. It affects the overall value of the property. And people do not want to admit that. Unfortunately, that is the case, guys. If you're in a flood zone here, the property is going to be worth less if it costs more to carry. I would comp it less. That's just how it goes. It's gonna sell for less because the carrying cost is higher. There's no way around it. Now, when you get into luxury houses like this, yeah, people don't care. It's probably not gonna affect it. We are right down the street from the water, so this is all flood zone, not gonna make a difference. But that, I can't seem to get it through some of the builders' heads too, that no one's gonna pay more money for an equivalent house that's in a flood zone as to one that's out of a flood zone. That's my personal opinion. And this is not breaking news, guys. This has been coming down the pipe for 2 years. A lot of people saw this coming and sold while they could. Either they got their new insurance bill or they saw the potential for their new insurance bill and they sold and they moved on. A lot of people in Sarasota, near the water, St. Armands, Lido, Siesta Key, all those places, I was very surprised to learn have basically all sold because of the cost to carry the insurance on these properties and moved east to 75 in some of the newer communities where it's much, much cheaper, which has fueled immense demand there over the previous year, though the sellers in the waterfront areas of Sarasota are now facing the same reality I'm talking about. The market has softened. There's less buyer demand. It costs more to carry their homes. They're not worth what they once were. So they can't sell and then go and buy $1 million property in Lakewood Ranch cash anymore, which has also seemed to kind of put Lakewood Ranch in that area in a weird situation as well. It's left a lot of people who are looking to sell in a very precarious situation because now they need to sell. They have to get out from these carrying costs, but the money that they were hoping for is no longer there. And a lot of it's pie in the sky, guys. Some of it's dreams. You could say, okay, well, these people, you know, they want 5x the equity that they bought the house for, and they can still make good money, but you got to assume, did they borrow against the home? Do they need other things to pay off to purchase their next home? Like, there's a certain number of people have to hit. I've been running into this a lot with sellers who just, not even flood insurance, sellers who want to downsize. They're getting older, they want to stop maintaining the house, they want to go into maybe a condo, which has now got them all super scared. They're all going to new construction condos as well because of all the other problems that we're having with those. And, you know, they come to find out that even though they may have 2 or 3 times the equity that they purchased the home for, the prices are still so elevated elsewhere that they're most likely going to have to carry another mortgage, which leads us into the golden handcuffs. And let me tell you, people are not afraid of giving up that 3% mortgage, 4% mortgage. They're more than willing to, especially if they feel it's going to improve their quality of life or they have to for a variety of life reasons. But when they go and, you know, a lot of people want to rush to me, let's list my house, I want to buy another one. And unfortunately, guys, I've run into this several times. I sat down with the seller, I said, listen, let's go get you pre-approved, let's talk to a lender, let's find out what you can afford if we sell this for a certain number. And they turn around and they're like, my payment's gonna go up $400 a month. Usually because they want to go into an HOA. Some have gone $600, $700 a month higher. They want to go into an HOA. They want to go into low maintenance is what I see. Other sellers just are selling and they're leaving. If they don't want to downsize, they're out of the state usually because they're done with the nonsense or they've hit an age where they have to go. But the people who want to leave large single families, downsize into something that is a little less maintenance heavy, more maintenance free, are running into this giant wall. And it's come to the point where I'm saying, hey, I think, you know, I don't want to lose a listing. I don't want to not sell your house, but I think it might behoove you that rather than add an additional $600 a month to your budget, which you don't seem to be able to swing, why don't you just hire somebody to take care of the house for $200 a month? I know, you know what I mean? It's going to be less than an HOA would. So that's a huge problem we have that's freezing up our market here a little bit. We have sellers willing to sell, which will become buyers willing to buy, but it's gridlocked because the golden handcuffs or the massive price appreciation. Some I don't understand, like they see that their house has gone up 3 times in value, but then when we're looking to buy, they're like, I don't understand. Why are these houses 3 times what they used to be? And it's like, oh my gosh, okay. So guys, when people tell you don't worry about insurance, we'll get it all sorted out, we'll do this, we'll do that, get worried. Get worried and start looking into things. And a lot of you guys that work with me are really good at that. I really appreciate you all. It's so impressive just how informed everybody is these days. It's great. I love to see it. I hope this channel helps people do that. I hope this is contributing to that. If it is, guys, please give me a subscribe. Maybe hit the notification bell, give this video a like. But yeah, you've really got to watch out today, especially in this market where we have agents selling a lot less. We have mortgage lenders lending a lot less. We have builders selling a lot less. There's a lot of motivation there to have them persuade you, shall I say. You know, we're all salespeople at the end of the day. Even me, guys, I always tell you, don't listen to a friggin' word I say. I could be lying about everything. Double check everything I say. I could be full of it. But you got to protect you. Nobody's going to protect you like you can protect you at the end of the day in a real estate transaction, or really in anything in life. All right, guys, that's what I got for today. If you like this video, give me a like, share, subscribe, and I'll see you next time.